Hello, 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 everybody. I haven't done a video in a little bit, but I have a lot to say on this video today. So it may be a little bit longer video than I normally do. I'll try to keep it as brief and concise as I can, but just have a feeling it's going to be a little bit longer than my normal videos. And I usually don't like to get into the topic for about a minute when I stream live because I like to let a few people at least come on and they have questions or want to participate in the live video stream, then I like to give them a few minutes to log in. Hey, Charles, how you doing? What's up, brother? I'm doing good. You doing good? Kundalini from Scotland. All right. Nice. That's a great thing about the internet and streaming live. You get to see and hear from people from all over the world, not just from your local area or just from America, but got Kundalini 222 from Scotland. All right, so it's a minute in here, so I'm going to start getting into what I wanted to talk about here today. So, about 3.5 to 4 years ago, um, I always kind of follow economics and financials and which way the economy is going, and try to weigh what people say and try to invest accordingly, right? As I'm sure a lot of you probably do. And so basically, about 3.5 to 4 years ago, Harry Dent, who is a pretty well respected, at least had been or has been. I don't know. I don't follow him very much anymore. But oh, we got somebody representing my hometown, Carson Trice. Sweet. Delta 19 is here from Mason Dixon line. We got people coming in from all over. All right, all right, all right. Yeah, had been, right? So, and also Peter Schiff, another pretty well respected person. At least he is always in the spotlight because he probably forces himself in the spotlight somewhat, but he gets quite a bit of airtime as well. And you go back 3.5, 4 years ago and you watch their videos, and they both predicted um, economic collapse soon, right? They said, sell your house. They said, sell your stocks. They said, put some money in silver and gold and hold on for dear life because things are about to get really bad. We're about to go into a depression like no one has ever seen. So, if you had taken their advice and you had sold your house and moved into an apartment and sold all your stocks, today you probably, if you live in one of the areas where the real estate values seem to just be going up, you probably would have missed out on a good 30, 40, 50, maybe even higher percent on real estate. And if you rented, you may not even be able to buy a house now. If you had sold all your stocks, you would be kicking yourself left and right because the stock market has just been hitting new highs month over month over month ever since Trump got in office. It's just been going crazy, right? So, to predict a time when we're going to have this economic collapse, which people today, X22 has been talking about, the X22 channel report, X22 report has been talking about for years. You talk about and today, so many people still talking about depression, collapse, be prepared, get your cryptos. Now, guys, it is going to happen. And I have a pretty good feeling when it's going to happen. I'm not going to give you a date, but I'm going to give you things to look out for. And when these things start to happen, it's the sign um, that the worst is about to happen. And it's always a good time to prepare in advance, so you're not trying to prepare at the last minute. So you can gather up your cryptos and your gold and your silver and other things that you think will bring value to you or just make life easier if times do get tough. So basically, we've seen the stock market just climbing, climbing, climbing. Well, as of the last few months, it's kind of just leveled off, right? So people have their money in the stock market. They might be getting a little bit bored right now. because they're not making those crazy gains like had been making over the last 3.5 years, right? But where are they going to put their money? In bonds? Bonds pay 1%, 1.5%. They might as well leave it in a bank savings account where they get, maybe 1%. Some banks, they really don't give anything anymore. But bonds are no more exciting than stock market, right? People are not excited to put their money in bonds. The only time people really are excited to put money in the bonds is when they don't want to lose their money. It's usually people that, especially at these type of interest rates, people that are wealthy and just want to preserve their wealth. But at 1%, it's not even keeping up with the rate of inflation, right? So bonds, not exciting. Stock market, getting boring. So, where else have people been putting their money? They've been putting it into real estate. And that's why we've seen over the last year or so, as soon as the stock market started to get a little bit more boring, um, and people maybe, people say, it's getting kind of high. Maybe I should look to diversify a little bit. Well, money has been going into the real estate market. Now, I know where I live in South Carolina, it's a quaint little town. It's not too far from Charlotte. Um, it's kind of a newer town. There are some old homes, but pretty much everything here has been built in the last 15 years and even less. It's just stuff is going up like crazy, right? And the prices of homes and real estate has really taken off in the last year ish, right? I've seen where I live go up about 30% in the last year, which is phenomenal. Okay. Real estate should probably go up with about the price of inflation, maybe 5%. 10% of it's great, but 30%, 40% in a year is above and beyond what real estate is supposed to do. It's supposed to be a little more conservative investment, right? So, what's going on now is the stock market is coming to level off, right? It's actually going down. Within this last 6 months, we've actually seen it take some pretty big dips and go right back up. Why is that happening? And guys, you got to listen to this because this is going to explain everything on how you're going to know when the economic crash is about to hit. So you've got the banks now announcing, well, not the Fed has announced that they are putting $70 billion into the economy every single day. And it's quantitative easing, but they're not calling it that. And they're not exactly putting it into the economy. They're giving the money into companies to buy back their shares of their stocks. So when they do go down, they can buy it back up and keep it up. So let's say, for instance, there's a company that makes sneakers, right? And just to make the math easy, let's say um, the stock price is $100 a share. So stock market price goes down $5. They borrow money from the bank at practically 0% interest, and they buy enough. They borrow enough money to buy it to make it go up to from down 95 up to 100 up to 105. So now you see it go up. So people's confidence in the stock market stays strong. If they see it go down 5% and the company doesn't buy back their shares, and then it goes down another 5%, then people are going to start to think, hey, this market is up really high. It's starting to dip. Maybe I should sell out. And before you know it, you see it drop down out of control, right? So every time it goes down, the companies borrow money or they have money that they've already borrowed from the banks to push it back up. Goes down, they push it back up. Goes down, they push it back up. We haven't seen it go up, up, up. We've seen it level, go down, and push back up. And that's the pattern it's been going on. And it's not doing that because people are buying stocks. Because I think people first of all, a lot of people are tapped out. They don't have a lot of money to put into stocks. A lot of baby boomers are the largest segment of the population. they're actually taking money from stocks to live off of now. Yes, they keep money in there, but they're taking more out than they're putting more in. Okay. So they want to keep the stock market stable for as long as they possibly can. And what they're doing is they're keeping an eye on real estate. Okay. Once real estate, see what happens with real estate is prices go up when you've got new home buyers coming into the market and you've got people who have already one home that want to invest in real estate because they see the price going up and they figure that they can rent out the unit, the condo, the house, whatever they bought, right? So we're getting to the price where inflation of the home prices is surpassing the price of what they can get for the rents. So where I live, last year you could buy a house for, let's say, $150,000, right? Um, you put your 20% down, that's $30,000. Your closing costs $35,000. That's a pretty good chunk of change to come out of your pocket. But you're thinking, hey, the price of the house should evaluate on average 3-5% a year. So I'll be gaining value on my money that way. And my mortgage payment on the house is, $1,100, and I can rent it out for $1,400. I'm going to make $300 a month. I'm fine with that. I'm retired. It's safe. I can maybe give it to my kids one day. It's it's safe, right? Now, what happens when the price of that house that they could buy at 150 gets up to, people are buying up this real estate. Now the prices are up to 200,000. Now, to buy the house, you've got to put down 40,000 plus maybe another 5 in closing costs. That's 45,000. That's a lot more money out of your pocket. Now, if the average rents are going for 1,400 and now your mortgage is 1,400 or getting close to that amount, now you're not really making any money, off the monthly rents. Now the only thing you're hoping for is continued appreciation in the homes. And we're getting to the point where renters are pretty much at the top where they can afford to rent and still have a car, insurance, pay for their electricity, pay for their cell phone, pay for their food, you name it, right? It's getting to the tipping point where um, new people that are going to be renting have to decide, do I really want to rent, or can I live with my parents for a couple more years? Or instead of rent, can I move in with somebody who has a spare room to help ease the financial burden? Once we get to that point in real estate where it's not financially feasible for renters to pay the rent, and it's simply because the price of the houses have gone up, and for the people who purchase these houses to make any kind of profit on the renters, they have to raise the rent, right? And when the renters can't meet that anymore and they stop renting, that's when the people here now realize that, hey, what if I can't find a renter? That means I'm going to have to pay $1,400 a month out of my pocket, plus put 45,000 out of my pocket to begin with. Now it's not a wise financial investment anymore. We're starting to get to that point. Um, so once these people stop renting, and the people who bought in at the top of the housing market, again, just like in 2008, realize that the renters aren't coming in. Um, I can't, I'm having trouble selling it now because there's less people looking to buy, because now the investor, because when you look at people that are buying the house, we mentioned it's new buyers and it's investors mainly, right? Mainly two groups of people. Once one of them drop out, the other one is not enough to support the homes on the market that are for sale. Once this starts to fall, you have to realize How many jobs are supported by the housing industry? You've got people that make money clearing the land, laying the pipes and the lines to the house, running the electricity, the electrical wires, laying the foundation. Another group of people come in and build the frame and hang the drywall. You've got a group that comes in and puts on the roof. Um, you've got the realtors who come in and make money selling the house. You've got the lawyers and title companies who take care of the paperwork and the closings. You've got surveyors. You've got painters. Um, you've got people who build fences, that make appliances, that install carpet and tile and wood flooring. Um, every house that is built, they say probably about 20 to 40 people profit off of it in some way. So once people stop buying the houses, now you think these people that are buying the houses, some of them are that build these houses also live in your town, in your neighborhood, right? They're the ones who also buy their kids. That's we talked about this stock of sneaker company, right? Say it's $100. So they were buying stock in this sneaker company, but now things are getting a little hard, right? I'm a roofer, and I'm not putting on as many roofs. I'm not making as much money every month, or I hang drywall. I'm not, working as much. I'm not making as much money. So first thing they're doing is, son, how this affects the stock is, son, I know I normally buy you a pair of sneakers once every 6 months, but sneakers are pretty expensive, and I'm not making as much money as I was last year. We're going to have to push that back to, instead of every 6 months getting a new pair of sneaker, every year. Now that affects the sneaker company's bottom line, right? It's less product being sold. They're not making as much money. Secondly, when people see um, the profits go down, the margins go down, they're more inclined to sell the stock. So now you're going to have two things bringing down the price of the stocks. There's going to come a point when the lenders see the banks who are lending this sneaker company money at almost 0%, when they see too many obstacles, that no matter how much money they give the sneaker company to buy back their own shares to keep the price propped up, that it's not going to help, because people aren't making the money, they're not buying sneakers, and they're also not buying the stock. Actually, now some of these people who do roofs and build houses and sell real estate are actually losing their jobs because there's not enough work. Now these people need to sell the stock that they own in the sneaker company. Not only are they not buying it anymore, they actually have to sell it to make ends meet now, which causes the price of the stock to go down even further. Once this starts to happen, the banks will stop lending money to the businesses. Okay? Meaning that they can't prop up the price. We're going to see, this is when we're going to see the stock market start to free fall, but it's all going to be based around real estate. So you need to keep a close eye on the real estate market. Okay? Once it starts to fall, the stock prices start to fall, and the banks know that there's no recovery, that we'll pump money into it to keep the price up, because now they're pumping money into stocks just to keep them level and not to scare people. They want to prolong it as long as they can for a couple of reasons. And one reason is because banks are very, very greedy, and the Fed is very, very greedy. Because don't forget, the people who own the Fed, the people who control the Fed also own the banks. Okay, so they're really lending money to themselves to lend to businesses. What's going to happen is these businesses are going to start to get in a lot of financial trouble because now the banks are going to want their money back. I mean, they borrowed a lot of money now from these banks to keep their stock price propped up. The banks are greedy, and I say that because there's three things that are going to happen. They're going to want their money back from the businesses, like the sneaker company. So they're going to bleed them dry and get as much money out of them that they can before the sneaker company folds. Once the sneaker company folds and goes under, guess who owns it? The bank. So now they got back a portion of the money that the sneaker company was able to pay back at 0% interest, which is free money that was basically given to them by the Fed, who is basically the people who run the Fed are higher ups that own these banks. So now these people, these higher ups that are higher than the Fed and part of the Fed, now own a business. They now own the sneaker business. So what they're going to do is they're going to grab a whole bunch of businesses that are not able to um, pay their debts, and it's going to happen. This is how the banks operate. This is what they did in 2008 to the consumers. There were so many real estate foreclosures on the market that they couldn't even put them all on the market because it would have driven every other house that was for sale down to practically nothing. So they actually held a lot of the foreclosures on the side and released them slowly as houses started to sell. Then they'd release a few more foreclosures, and as the prices went up, the banks just made more and more money. In return, as it is, it's the people on top that are part of the Fed who own the banks made more and more money. But people suffered because they lost their homes. When you lose your home and losing your job is bad enough. It sends people into a severe depression when they lose their jobs, they lose hope, they get desperate, and then can you imagine losing your home on top of it? Well, now, and the Fed doesn't care, and the banks don't care, and the people up top don't care because they're greedy, they're sick, they're sociopaths, and they're evil is the only way I can really say, the best way to explain it. Okay. Now these people who are losing their jobs, now that the businesses are completely gone under, um, the only thing that can save these businesses is if they start investing in something. When they get these loans from the bank to buy back their stock to push up the price, is to actually put that money into something else that can appreciate in value faster than the dollar if they want to be able to keep their business. And business owners, if you're out there, listen to me. If this is what you are doing, and I don't know, my channel isn't that big, but if you know a business owner or you work for a company and you talk to the business owner and you know this is going on, heed these words. You need to put some money into Bitcoin, Litecoin. I don't care any of the top 10. To be safe, any of the top 10, except for a Tether, which is just going to be a dollar equal. That's, you don't know much about cryptocurrencies and this is your first time tuning in, it always stays the same price of the dollar. So, but, top 10, 15, even 20 coins, but preferably Bitcoin, Litecoin, Ethereum, um, because when you lose your company because you don't have anything of value to pay back your debts with, you're going to wish you had some cryptocurrencies. So now, what people are doing is they're going to buy gold, silver, and cryptocurrencies because, along with the price of everything going down, you're not going to have your money in the stock market anymore. People are going to be fleeing the stock market as they see it drop 5, 6, 7, 8, 1,000 points a day. Right? They're going to be running for their lives out of the stock market, trying to get their money. The brokers' lines and their servers on their on their home pages of their stock trading accounts are going to be tied up. There's going to be so many people on there trying to sell. They're going to put stops on the market. They're going to close the markets early to stop the panic selling. They're going to do plunge protection, where they are going to pump money into the market to try to keep it up, but it's not going to be of any good, any use. And that's not going to last very long, because they know that it's a losing battle, that it's already lost. It's like a sinking ship that's going down. You can take a bucket and try to bail water out of that sinking ship, but you can't bail it out fast enough, because as much as you try to pump in, more is being pumped out. These little people like you and me who work at these companies that are losing our jobs, that have some bonds and have some stocks and that are able to pull the money out, they're going to look and see, what can I do with my money? I can't put it into real estate because real estate is free falling. The stock market is free falling. Bonds, my money will be safe, but it's not going to help me. I'm desperate for money now. I'm going to run out of money too fast if I leave it in bonds, because it doesn't pay me anything. I don't make any money on bonds. They're going to see cryptocurrencies start to go up, and it's going to get people's attention real fast. And they're going to see, as fast as the stock market's dropping, they're going to see cryptocurrencies start to go up. And then they're going to be diving into cryptocurrencies as fast as they can, because it's going to be a matter of life and death to some people, a matter of eating and not eating, a matter of keeping their home and not keeping their home. So when that happens, and I don't know when it's going to happen, but my advice is keep a very close eye on the real estate market, because it's the key to everything. It's not just another thing that's in a bubble. It's the key factor, because of the employment that it provides, right? So, I mean, you can look at individual things like a stock or this or that, or oil or gold. If these things go down, it doesn't affect a large group of people. Real estate is the thing that affects large groups of people, 20 to 40 people per property that's turned over. And when the real estate market, and it's going to take more than a cool down, you'll see it cool down, and we're going to know when it starts to drop that is going to be about the end of the financial system. Now, the banks are hoping that they can grab up all these businesses, all the homes that are being lost. Then they're going to try to bring in a universal income, and then we're basically going to have socialism. This has been the plan for the last 20 years. All right, but at least, if not the last 20, the last 16 years at least, to bring socialism and then take away everyone's freedoms, and have these people up here that I talked about over the Fed basically control and own everybody and dictate how much money you get, and whether you can fly, and whether you can travel, and how much you get to eat, and what kind of food you get to eat, and what kind of a house you get to live in, how many square feet it's going to be, if you get a car, what kind of car. These people are going to be in control of everything. And with socialism like China, it's unlimited as to what kind of laws and restrictions they can pass. Like in China, you're only allowed to have one child for the longest time. They could very easily do that here. And I know this sounds like it's a little bit preachy, but these are all things that can happen once we lose control. And this is one of the main reasons why I'm so into cryptocurrencies, because once you have cryptocurrencies, it gives you a financial way to buy and sell, leaving these people out of it, right? So if everyone was to go out and buy some cryptocurrencies, some Bitcoin, hey, I like Bitcoin and Litecoin, but if you have, I don't know, a basic attention token, and you wanted to buy, wanted me to paint for you, I would take it in basic attention token. And if the dollar's going down and everything else is going down, I would probably prefer to take it in basic attention token because it's going up, or in Litecoin. I prefer Bitcoin and Litecoin because those are going to be the ones that really go up. But I would take it in any cryptocurrency at that point over dollars. And if we can all start to do that, that's what's going to save us from being part of this system that they're trying to own everything. They're trying to own all the real estate and all the businesses, and then dictate how much you're going to be paid, what kind of hours you're going to work. All you need to do is look back at when the Rockefellers and Carnegies and who are the other big guys, but if there's a series that you can watch on TV, it's probably on YouTube. I think it was like The Men Who Made America or The Men Who Built America or something like this. And back then it was probably in the 30s, 20s, 30s when the Industrial Revolution was going on. And they would basically have people in America working 60 hours a week for hardly any money, very similar to what it's like in China today. They pretty much want to bring that system back. Um, we had we put in laws in place to stop that from happening, to stop child labor laws, mandatory payment, minimum wage. Before all these laws were in place, people would pretty much die at the job, working to death, because they had to work because, first of all, the jobs didn't pay much, but they did pay something and it was better than having nothing. So if you had to live on soup and bread, at least it was something to put in your belly. We've got it good here now. We don't want to go back to that. And we don't want to let these bastards bring us back there. So, guys, I urge you to let everyone you know to watch this video, or at least explain to them what's going on. Because I know people with any kind of common sense know that things don't go up forever. They know that the stock market doesn't go up forever. They know that this money going out. And you see, I was wondering how, what if they just keep giving this money to these businesses for infinity? Is there ever going to be a problem? Well, and I was like, well, maybe they could do that. Maybe they can just hand money to businesses forever to keep the system propped up. Guys, please give me a thumbs up, like, subscribe. I like to ask you to do that at least. I don't get paid to make these videos, so if you can at least give me a thumbs up if you get any value out of what I'm saying, and I hope you do because this is a really important video. Um, but basically, guys, that is the message. Please let people know what's going on. I think my wife is home because my dog is barking, so it's a good time to end the video. But please, guys, kiss your spouse, hug your kids, pet your pets. God bless each and every one of you. I'm probably going to change the name of my channel. Daisy, stop. From Joe Knows Cryptos to something a little more financial so I can talk about cryptos and finances as well. I don't want to turn off people who don't know about cryptos to not watch the channel, but I'd like to get people who don't know about cryptos to maybe tune into a financial channel and learn about cryptos here. So with that being said, I'm going to look through the comments really quick here. And just see if there's any time to get out now. Repo. Joe Gladden TV, what's up? Hey, what's up, everybody? Just repo market is a big sign. Yeah, repo market is a big sign. There's been plenty of videos about the repo market, so I'm not going to talk about that. Lead, don't forget lead. Oh, lead. Yeah, lead, lead. Food, silver, cryptos, lead. Don't forget lead. All precious metals will have value that will increase. Charles Ferraro puts in that, and I agree. Aztec Kane says, I'm number one. Thanks, Aztec Kane. I don't like to be considered number one. I just like to be considered someone who tries to let you think about some other things. I have some very interesting videos that I want to make about some experiences that I've had in the last week that are really mind opening. And I like to express to people, but I'm already getting 35 minutes here, so I'm not going to get into it on this video. Aztec Kane talks about a Pepsi bottle was 5 cents, now it's $1.69. Inflation, 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 right? Devalue of the dollar always loses value. And with halvenings, cryptocurrencies like Bitcoin and Litecoin are always going to be gaining value. So I don't know when this is going to happen, but I gave you the key indicator to look for. And if it takes a month, if it takes 6 months, if it takes a year, I don't know. But it seems like, at least in my area, the real estate market has gotten to the point where it doesn't really make sense for investors to come in and buy anymore. And once that leg gets kicked out from underneath the stool, it's going to cause it to topple over. There may be still some select homes that they can still buy, but I am a licensed realtor and I can see the market. I can see when the listings come available, how many new homes come on the market and how many are sold that day. And that's a very good indicator. So when there's more coming on the market and less selling, it takes a month or two for the differential um, to make a difference. So right now, it was so many people. There were more buyers than sellers, right? So all these people buying, buying, buying. Now, as the house and the rental values are leveling out, the buyers and sellers are about even. The next step is going to be there's going to be more sellers than buyers. It's just a natural, like a scale. It's about level now. But the next thing is going to be more sellers and buyers. And once there's more sellers and buyers, it's not going to take long to tip out of control, like a seesaw, right? Because what's going to happen is now the people who are selling are not going to be able to sell quite as fast. They're going to have to drop their price. There's going to be a point where people bought so high that they can't drop their price, because by the time they pay the realtor fee, their closing fees, what they paid for the house closing fees is going to be more than they can sell it for. It's like being upside down in a car. It's being upside down in a house. And once that happens, and it may take a while, because there may be some people selling their house who bought three, 5, 10 years ago, whatever, that can afford to drop the price of their house because they paid some equity into it. They've already seen mass appreciation over the last year. So it may take a little while for it to nudge down, but once it hits that critical point, it's going to tip, and it's going to tip badly, unfortunately, I think, worse than in 2008. The only reason people are thinking it's not going to be as bad as 2008 because the loans are not as easy to get, but that'll be the next step that they'll do. Once they see it's starting to tip, they're going to make it real easy to buy houses again, to keep the new home buyers hopefully able to prop up that leg that the investors kicked out. And that'll work for a while, but it's just going to be like, how they had that no money down loans, 3% down. So now when you buy a $200,000 house, instead of having to come up with 40 grand, you come down with $1,000. They're going to start doing these things just to keep it propped up for as long as they can. But once you see that happen, that's a time to really start investing in cryptos. It's a good time now to keep hodling, buying in slowly. When you see that happening, you know that the time is short-lived. I think the only thing that Trump is hoping for is that he can bring in enough new jobs. So when real estate does go down, we do have industries to fall back on that will bring in jobs for these people who are losing their jobs, or that'll just help keep the the rest of the economy afloat, because right now there's not that many jobs that are necessary. They're talking about IA and AI, excuse me, artificial intelligence, robots, quantum computing. A lot of jobs are going to be disappearing that way as well. So, all right, guys, I'm going to have to go here. My wife, I guess, needs to talk to me on the phone. So, love you guys. Please heed my words. Hello from Norway, Happening Show. Cool. Tucked away 300 ounces. That's great, Crypto Roger. Guys, if you can take your paycheck every week and just take 10% of it, if you can, 5% of it, but something every week and put it into something that is going to hold its value. Um, yeah, a lot of people, UBI, Crypto Roger likes silver. Aztec Kane has some basic attention. I talked about that a little bit earlier. Bitcoin to 10, 16,000 Litecoin, 10 to 16,000 Litecoin. Um, Anything that is easy to buy as far as cryptos go are going to be the first ones bought. The first one bought is going to be Bitcoin because people know what it is. People that don't have a lot of money that may want to have more shares or more coins are going to look to Litecoin and less expensive coins that are easy to get. They're not going to go on markets where they have to do all this KYC and get their bank account set up and um, deal with overseas. They're going to go right to Gemini. They're going to go to Coinbase. If there's any new exchanges coming on now, I listened to a John McAfee interview yesterday. He said there are some exchanges that are about to go live that a 3-year-old is going to be able to navigate, which was one of the big problems with crypto now is that too difficult for people still to get on. But once it's that easy, once it's that easy, anything that's on those exchanges are going to go up. Homes are overpriced. I agree. I don't know. At least where I live, and I lived in one of the areas that was not really hurt that bad by the 2008 recession. It's one of the more conservative places as far as appreciation go. But even here, the prices have been just going crazy. Paid off your house 9 years ago. That is fantastic. If you can own your house outright, hey, at least the bank can't take it, right? Um, well, Trump will have a tough time getting reelected. I think he's going to get reelected simply because everybody sees. I got to get this, guys. Hang on for me. Hey, hon, how you doing? Oh, yeah, 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 yeah. All right, on the way. The house. All right. Are we going to be out front? Okay. Bye bye. All right, guys. I forgot. I have to pick up my wife. All right, guys. Peace out. Love, kisses, hugs. God bless each and every one of you, and have a great night.